I'm joined now by Nnamdi Nwizu, CEO, Commercial Partners Trading, to review some of our top stories in more detail. Nnamdi, good morning to you. Welcome to Business Week.
Good morning.
Great to have you on the show.
Same here.
Yes, please. All right, let's begin with Nigeria reviewing investment rules for its $17 billion pension funds. What sectors should be prioritized here for optimum returns?
I would say most probably look at infrastructure.
Okay.
If you look at how much the pension funds are allocating to the infrastructure sector right now, infrastructure, private equity type transactions, it's extremely low. We're looking at about maybe 240 billion or thereabouts, which surprisingly for 2025 is about a 50% increase, right? If you consider the fact that the funds are about 24 trillion naira and you have roughly about 250 billion invested in infrastructure, that means they're talking about what, about 1.7% that you've put into infrastructure versus the 5% limit that you have from the PENCOM guidelines. Even though they're trying to change the investment guidelines to increase that limit, the fact remains that they're still not even really scratching the surface. If you think about developed economies, you would see pension funds that would even invest in, maybe they have major stakes in banks, for instance, right? So also talk about equities. And they more or less control what happens in the bank. You see them being activists, trying to remove whoever is running the bank, trying to put new people and inject new energy into it. It would be good to see the Nigerian pensions managers, fund managers, start to have those kind of structures and kind of investments in place. Yep. One important thing to look at anyways would be whether or not they have the skill set. Because the fact that most of their funds keep going into regular FGN bonds, treasury bills, and they don't do so much in private equity type or infrastructure type structured deals, calls, into question their appetite and also the expertise they have of some of the fund managers to actually delve into those kind of asset classes.
Now, the skill set is certainly a very legitimate concern, and so let's hope we can wait to see how that rolls out. Let's move next into President Donald Trump's claim of firing federal Governor Lisa Cook. Now, of course, this has raised questions about central bank independence. In what ways could this possibly affect global market confidence?
Well, I mean, I'll say that people expect a lot more from the U.S. versus other countries. I mean, in Nigeria, we've seen central bank governors get removed a couple of times. We saw Sanusi get removed. We saw Emefiele get removed. And, people moved on. It didn't really impact market as much. But people look at the Western world, the U.S., more or less as the proper examples of what everybody else should follow. And we also know that the president, or President Trump, has been trying as much as possible to take control of almost every single sector that you have in the U.S. We've seen them strike a deal with, I think, was it Intel or so. Yeah. They're talking about defense contractors, U.S. government taking some share of, some particular defense companies. We've seen them pushing for lower rates from the Fed, which ideally should be extremely independent and should not have any influence whatsoever from the government, because that is the worry that people have. People coming to invest, they want to sit down, do their analysis, look at how the economy is going, try and predict growth, and based on that, make their investments. They don't want to come in and have a case where you now see some sort of political interference, which is basically what you're seeing now. If you also consider the fact that ideally for you to remove a Fed governor, it has to be for cause. A lot of people say, really, has that requirement been fulfilled? Can you say that truly there has been cause to say you're removing a Fed governor that apparently she either lied or made an error in her mortgage application years before she even became the Fed governor? Cause ideally should have things to do with the person's performance, illegality of some sort while in office, and not something that they supposedly did years back for which she hasn't been charged for. No action has been taken from the government with regards to that. And the first thing that happened is we're going to remove you from the Fed board. Meanwhile, you have a lot of nominees from the executive who have issues, and people have raised various accusations against them, and nothing has been done about removing them. So this naturally smacks of some sort of political influence once again to try and put in people who would support President Trump's policies and hopefully have lower rates, versus rates being driven based on economy and market forces. This will now be rates being driven by the whims and caprices of whoever is in the White House.
Right, so there are certainly some ulterior motives there as well, and we'll just have to wait and see how this proverbial cookie crumbles in the end. Let's look next at the DMO raising 136.16 billion naira in its August 2025 bond auction. What does this tell us about investor appetite and Nigeria's current debt strategy?
Well, if you look at what happened at the last auction, the bid to cover ratio means the amount of demand they got versus what they were trying to sell was 1.34 or thereabouts, which is the lowest we've had in quite a while. If you consider the fact that just 2 or 3 months ago in June, when they had an auction, the bid to cover ratio was 6 times. And now we're at 1.34, which shows that you've had a huge drop in appetite for bonds. I think what you had initially had been quite a bit of interest from foreign investors coming in. Exchange rates was at very high levels before it moderated a bit. So it was fantastic for them to come in, convert their dollars to naira, and come in and buy bonds. You also had the belief that DMO and the government were going to reduce the amount of borrowing they were going to do across for the remaining parts of the year, which led to the record bid that we saw in June. And also, you had seen rates drop aggressively. So if you look at the auction they had in July, closed at 15.9 for the 2032 maturity, 7-year maturity. The same bond closed at 18%. So over a 200 basis points increase in rates, and despite that, they sold much less than they did at the July auction. So that basically tells you that people are getting a bit worried about rates. People had thought that that expected that by now MPC would have reduced rates, which hasn't happened. 2, you've had government suddenly come out. Initially, they signaled that they were going to reduce borrowing, but that has changed. With the calendar they brought out, the last calendar showed an uptick in what they are going to offer. So at this auction, they offered 100 billion per auction versus per maturity. They had 2 maturities versus July, where they were offering 50 billion per maturity. So sort of signaling that, looks like government suddenly needs to borrow a lot more. You've talked about some obligations to settle, I think some outstanding with the power sector, some funds that they owe, the Gencos. So you've had sort of quite a bit of supply that people believe is going to come to the market. And that has led to people withdrawing, their aggressive bids and sitting by the sidelines and waiting to see how things play out. Right,
but holistically, what does this tell us about our debt strategy, though? And you use the word worry now. Yeah. Is there cause for more alarm?
I wouldn't say so. I mean, I think a lot of reforms seem to be on the right track. We know that government is trying aggressively to push food production up. And if that happens, then you start to have a lot more of inflows from dollar sales. You also look at their midterm framework that they released recently. They talked about they are looking at moving the local debt from 48% to 55%, local to foreign borrowing, which means they're trying to keep an eye, or they want to keep an eye on their foreign borrowing, just to be sure that you don't have excessive exposure to foreign currency and crude oil movements and co. So I think that with that, we start to see that they're keeping an eye on things, and they're trying to just ensure that it doesn't get out of hand. So, I mean, we still have quite a bit of faith. So things are under
control, hopefully. Faith being an operative word here. We have just very few minutes left. The next story, of course, is one that's got a lot of Nigerians have waited for. That's the federal government launching a new portal for reporting housing estate fraud. Very briefly, let's know what should we know about this, and how impactful could this be for curbing real estate scams?
I think it's an interesting one. You're going to have a portal where people can go in and report issues that they've had, real estate fraud, in conjunction with EFCC. I think the portal has been created by the government in conjunction with EFCC. And I think it's a great one, because we do know that you have quite a lot of real estate fraud that happens in Nigeria. there's almost nobody I know that hasn't had issues with buying real estate, especially in Lagos. So if you have a portal where people can report this and action actually happens, I think you start to build a lot of confidence. Something else they need to do would be to sort of ensure that they have electronic records across. In developed countries, you can just go online, type in the details of a particular plot of land, and you can see the history, former owners, current owner, and it gives you confidence who you're trading with or who you're dealing with at any point in time. Unlike what you have in Nigeria, where you have to, have all sorts of, you have to go to, if it's in Lagos, Alausa, try and get records manually, even though I know they're trying to digitalize it, but it's still a very cumbersome process, and you still have a lot of fraud that still happens, despite the fact that people are sending their lawyers to go and do checks for them at Alausa. Things still escape. So if you have a way to actually report this and have government take action, hopefully start to sanitize that industry, and then you would most probably see a huge growth in that real estate sector.
Right, certainly. So it's a very welcome development,
Fantastic
but operationally, we need
Yes.
to ensure that this becomes quite effective in the long
sure.
run. If you joined us midway, I've been chatting with Nnamdi Nwizu, with CEO Commercial Partners Trade. Nnamdi, I want to thank you so much for joining us on Business Week. We'll see you again very soon.